All right. I guess I'm ready. Sorry about that. I was just lost in my work, didn't even know what time it was. Welcome, welcome, welcome. How you doing? Comment allez-vous? Welcome to Forex.Today, the YouTube community for approximately 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning trades. Let me remind you that even if you're planning your trades, your trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I like trading. So if you like trading too, you're in the right place. Let me know how it can help. I'm here to share. I consider myself a servant in our relationship, but specifically when I do these live streams. So let me know how it can help. I will do my best to see in the chat, your question, and then be able to answer that. Sometimes I don't see it. But anyways, ask questions and I'll let you direct where we go today. In the description below today's video, you'll see a link to my book. You'll see a link to free training courses. You'll see a link to paid training courses. You'll see a link to FX Bootcamp. It's $88 a year. And you'll see a link to tradersway.com, a trustworthy foreign exchange broker that has a business model based on ethics. They see their relationship with you as symbiotic, so they hope you find success. They value education in your life, with the hopes that maybe you don't blow up your trading account like the average foreign exchange trader. Ooh, my coffee's green. I don't know if you can see that. Can you see it? Matcha, matcha, what you want. Matcha. Matcha, matcha, what you want. So anyways, I don't know if I like it. Oh my God. Anywho, so let me know how I can help. Click the description below, go to Traders Way and open up a demo account. Yeah, yum wouldn't be the word for it. All right, so holy smokes, lots of stuff going on in the world today. It takes everything you got. So this is where I just left off in the day trading group last night. Man, we work hard at this, huh? It's just nonstop, isn't it? Well, anyways, I appreciate the effort and that you put into this. I think it's worth. I think it's worth it. Here's one of the things we talked about, and we used the red dots to decide whether we should stay in this trade or not. It said we should, and now I'm up more than 1,000 pips. Yesterday I was only up like 600 pips or something. Now I'm up over 1,000. So that's a good day. It's not very many trades either. Thank you, PSAR. Thank you, PSAR. It also means I'm getting pretty close to 1,000 pips on that one trade. Cool. Cool, cool. So thank you, PSAR. Hope says that was a great lecture on oil. Yesterday. I did a lecture on oil yesterday. Well, if you're happy, hope I'm happy. But hey, speaking about oil lectures, today is the oil trading course. This is the last formal lecture on the energy complex made easy. And then moving from that, we are going to start doing sort of trade planning and techniques. Okay. Oh, on the backwardation. Yeah. Yeah, where it's been up all night. Yeah, that was yesterday. Well, the thing is, yeah, I've covered it before. So it was more of like, hey, this is what I talked about. And then the government stepped in to hide the fact that there was backwardation. And I'm like, but you're supposed to know there's backwardation because it tells you something's wrong. So I don't like it when somebody, hides the fact that something should be fixed. But like I said, Hope, if you're happy, I'm happy. Right? And about 4,000 other traders. Well, where did you get the other? What 4,000 traders? Oh, it's coffee. Oh my God. Coffee with matcha in it. And real matcha, not fake matcha. Anyhow. Yeah, look at the market. 4,000 people don't watch my videos. It'd be all right if they did, but if they don't want to, I don't care. Okay. Pound yen. Holy smokes, eh? Our concern with this last night is it's done. Michael, yeah, it needs sugar to taste like grass. This doesn't taste like grass. It tastes like tea bags. Oh, okay. Let's address this question. Alexander says, why don't you take one big euro dollar short instead of trading the USD strength? It's a way of mitigating risk. Okay? Okay, Alexander? So instead of betting that the euro is going to be weak relative to the dollar, my focus is really buying the dollar. So I'm spreading my bets because for the euro dollar giant trade to work, I need the euro to be weak and I need the dollar to be strong. But the euro can gain strength, and we've seen that it's been relatively strong the last week or so. And this has to do with the idea that they're changing policies of actually raising interest rates at the ECB because they're so far behind. So even though euro dollar is not really rising, euro relative to everything else is rising. So what I do is I made my dollar decision, obviously, but then I look at things, instead of putting one big one on, I'll say, well, is Aussie exhibiting weakness? Is pound exhibiting weakness? Is Kiwi exhibiting weakness? Okay? And right now, euro's not. So this wouldn't actually be a good trade. And that's why I do it. So I have some certainty because only the Sith deal in certainties. So I guess I'm a Sith. I'm certain I want to buy the dollar. I'm not so certain on what I want to sell. And that can change. So I do relative strength over that, technically and fundamentally. And so right now I'm like, not this one, but this one, and this one. But I do plan on selling euro if I can get the technicals to agree. So I'll go to the dollar trades. And so let's start with euro. Let's actually go with euro. Okay. You see, it's done okay. So Tuesday's day trading plan was sell here. We have another one in the future, and it really hasn't done much in the last 24 hours. Euro dollar hasn't done very much in the last 24 hours. Meanwhile, I'm short Aussie dollar and it's dropped very significantly. In fact, I'm about to get knocked out. You see my profit target? 333 pips profit. Meanwhile, today, euro hasn't done much at all. Okay, here's pound. Okay, here's a pissy little swing trade. I'll move my stop now. It's just a swing trade. I'll move my stop. So I can't lose money now. I'm short at 116 and we're at 114.30. So that's up about, what, 150 pips yet? Okay. Meanwhile, euro dollar's done nothing. Okay. And then the other thing is I want to sell yen. That was the other thing. I'm a seller of yen. Okay. All based on the dollar. And as you can see, that one's up. Here it is. I'm in at 136.5. We're at 144.5. So that's 800. It's a little more. That's about 900 pips. So look, it went from 143 to 144 something. So euro dollar didn't do much, but I made 150 pips last night. You see? But euro dollar hasn't done anything. So why not just put one giant trade on? Because there's a 50% chance it doesn't work out as good as you want because euro doesn't act the way you want it to act. Maybe the dollar behaves the way you think it should, but euro could just not. And now your trade is stalled up while everything else is moving. So you kind of want to bet on all the horses. Basically create an index. But with an index, you don't collect yield either, so. Michael, you can expect weakness until it stops. So you have your own decisions to make. I don't know what the Bank of Japan is going to decide. Is the 0.25 interest rate, yield on the JGB an important? Yes. Are you at the monthly monthly R2? Yes. What are you supposed to do there? Okay, you do you. Right? I ain't your mama. Okay, that's that. So that's why. Okay, I got people asking about oil. Yeah. Oil doesn't look good to me. You can have it. Did I buy it last night? No, I did not. Well, I haven't said anything like that, Alexander. Do I believe in market manipulation? No, because I know what I'm doing. Okay. Risk off and play for oil? Yes. Once again, I described last night in the day trading group why a second wave down is likely. Not technically, not even fundamentally, but mathematically. So a recession isn't even priced in yet. Isn't that crazy? Recession isn't even priced in yet. But one of the things I can show you, oh, dang it, son of a... One of the things I can show you is if you look at the risk on basket of basket trade, okay, there are less positions now than there used to be. So money is coming out of risk on and money is going in, okay, into the risk off basket. So risk off is up 3%. Risk on is down 2%. So there's a differential of 5%. Okay? You can see positions in oil. I should do it this way. This is not working. Let's do it this way. No, this way. There we go. Positions in oil, okay, are coming down. Okay? And in fact, if you're going to look at oil, okay, you can see 9,500 less contracts long and 100,000, no, that's total, sorry. This, I need to change that differential. One's in percentage and one's in total contracts. Interesting. All right, let's put it this way. All right, it's a mixed bag here, but there are 8% more contracts short oil this week than before. And there are less contracts long oil. Henry, why would it? Why would you have to answer the question? Like you're asking me, but like, so why? I mean, I can answer it. I'll say no. So, but it's meaningless. Hang on. Okay. So you can see money is coming out of that market. Okay, one other thing, we can look at gold. Okay, gold is still coming down. That's good. If it makes a lower low, that'll be technically quite significant, wouldn't it? If we can drop and hold below 17, and we just broke through 1700, what's the target, dude? Dude. The out of position target is 1650. And we just got below 1700. What the heck is going on? Cool. Okay, all that makes sense. It's everything I've been preaching. I preach to teach. Okay. Bitcoin dropped significantly. One of the things I talked about last night in the day trading group, hint, you should join, Bitcoin going to $10,000. What? Alexander says, could you tell us your thoughts on trade balances? It's in the macroeconomics course. Join FX Bootcamp. If you don't know how to do it, you should join. That's the whole point. Let's see. Okay, so you're inside FX Bootcamp. Okay, that's how you get into the swing trading group. That's how you get your tools. Right. Look at all the tools I added, so that you can add all these files to your MetaTrader. There's more than that. Right? Beautiful, right? Anyways, go into the videos. You have to go to macroeconomic principles. And what did you want? Balance of trade? You can do terms of trade. It's probably the one you want. Or the fundamentals of trade. That might be the one you want. I think on page 2 of the course, you might have it in here. Nah. Let's go back. Yeah, so probably either the fundamentals of trade or the terms of trade is probably what you want. Boom. So, hey, welcome to Macroeconomics course, lecture number 4. We're going into terms of trade. But let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay smart. So, as we said, an economy can make some choice. So I can do whatever I want. Hang on. Your economy be making cars. We're 4 works. Okay. Hey, man, it's good. 4 works. That's all I can tell you is it's good. It's good. That's the stuff you'll learn in college if you're studying economics. Yeah. Hey, it's $88. I don't have the time or the money, Wayne. Then I'm not going to answer your question. Let's put it this way. Let's go to dollar pairs. But let's look at euro, just so I can have something to draw on. What you're asking me is essentially, is balance of trade or trade balance, is it important? Well, when analyzing just the US dollar, you're going to analyze consumption plus investment plus government spending plus spending by foreigners, X minus M. Okay? Isn't that trade balance right there? Exports and imports. Okay? So think of it. Does it matter? Well, on like an entry-level thought process, does the country export more than it imports, or does it import more than it exports? Is it an exporter? Or is it an importer? Well, the United States. Well, let's not do the United States. Let's do Canada, Australia, China, and Japan. They're exporters. So there's lots of things you could derive from that. They prefer a weaker currency. You could say a decline in macroeconomic activity would mean other countries would import less, which means they would export less, which would be bad for their economy. And that would lead to disinflationary conditions, unemployment, falling asset prices, falling wages, falling interest rates. Now, the importers, typically they want a stronger currency because they're buying stuff from exporters. But the more they buy, the more they're giving the exporters money because the exporters are giving them stuff. So if you export your money, okay, importers are the exporters of money. So a country like the United States that imports more than it exports, so it's an M country, so you get rid of the X. The more they import, the more the currency weakens. So think of this, Alexander. Is a weak US dollar good or bad? I hate to use that kind of language, pardon my French, but you know, it's a basic conversation, so let's have basic good or bad. Is a weak US dollar good or bad? No, don't say what if it's okay. Well, it's a backwards question. Now, Alexander's not answering, so maybe he's gone, but it's a backwards question. When the United States economy is good, you would think that its currency would be strong. Maybe. But then because they're deciding to spend their money, see, that's what makes the economy good. People have household wealth effect. They feel secure about their job, they feel secure about their income, and most importantly, they feel secure spending their money. And when they spend their money, if they buy stuff from Walmart, there's a 99% chance that stuff at Walmart they're buying comes from another country. So they're spending because they feel good about the economy, they feel good about their job, they feel good about their wages, and most importantly, the future of all those things. So what do they do because they feel confident? They feel rich. What do? They export their cash. Thanks, Kisa. They export their cash, which does what to the cash? It weakens the currency. So the United States being an importer, it's not that weak currency is good for importing, it's actually bad for importing, but because they are importing, the USD falls. And you have to read into that. It's falling because Americans believe they're filthy, stinking rich, or relative to foreigners, they are filthy, stinking rich. Because the Walmart shopper living in a trailer park is rich to the guy in the Vietnamese countryside living in a hut made out of bamboo. Who's growing shrimp under his bamboo hut and selling, and eventually that shrimp gets sold to Walmart and you get shrimp for $7.99 a pound. Okay? Whatever, you import the shrimp and you export the money. And because the guy at Walmart is eating shrimp, he's filthy, stinking rich. Okay? So it's a consequence of goodness. So balance of trade, does it matter? Well, if the United States, so let's say this is nominal GDP for USA. So this is Y sub USD or USA. You add all this up inside of nominal GDP and you will find M is greater than X. They import, and if they import more than they export, the US dollar will be weak. Well, right now, the US economy is in turmoil, and the US dollar is at an all-time high. And I think what you'll find is we're exporting more in dollar terms than we normally do. And we're importing less in dollar terms. So now, right, maybe it's real GDP, but this impacts, yeah. So how'd you like reconcile that? Apple today is releasing their iPhone 14. Is it going to be a huge seller? No. Because if you look at Apple's orders from its suppliers in China that make the iPhone, their orders numbers are flat. Despite the hype. Think of this. With all the hype. Oh, the new phone is going to talk to satellites. It's going to be great. It's going to do this. It's going to have 19 cameras and they're going to be 47 billion pixels and great. You just got to have it. It's 1 millimeter wider, 1 millimeter thinner. It's got Gorilla Glass 17. You got to have this because Gorilla Glass 16 is just not good enough anymore. You got to spend $1,000 on this phone. Hype. Whoop. Here's the thing. Despite all the hype, and remember by hype, I mean they're spending money educating the world about the iPhone 14. But then they're going to their suppliers and they're like, make as many iPhones as you did last year. So they're doing all this just to keep their head above water. They're treading water. Okay? So we're probably importing less. And the dollar's strong. Why are we going to import less? Less Americans can afford a $1,000 phone. Because the $1,000 phone they bought 2 years ago is still good. They still got a 12. And they're like, yeah, it's good. It's good. The pictures are great. Okay? And that's that. So I like to look at the high frequency data and say, well, Apple's trying to sell a bunch of stuff, but is Apple a buyer? Apple's not a buyer because remember, they buy the phone. They don't make the phone. It's not even their phone. Someone stamps an Apple logo on it, right? So they're trying to get you to to buy stuff, but the thing is they're not buying any more than they did last year. So, balance of trade. How will that impact the US dollar? Well, think of it. If we're not importing an iPhone, then we're not exporting the US dollar. Therefore, the dollar wouldn't weaken as it normally would if you did buy the iPhone, because you're not really a buyer of an iPhone, you're a seller of the US dollar. How can I convert my American money into stuff I want or need? I don't want money, I want a BMW. Actually, I'm sick of BMW, but I'm happy with Porsche. All right, I don't want a BMW. I'm going to sell my BMW. Yeah, I want a Porsche. I want to convert my cash into a Porsche. Cool. That's how you do it. So I export my US dollars to Europe, convert it into euros. So I'm a buyer of euro, seller of dollar. And then I convert my euros, which I don't want. I convert that into a Porsche. Gisa wants to know, what about now what on euro dollar? Do you think the ECB meeting is going to be important for this pair? Then why don't we look at that? Another thing you could do is you could say, well, let's take a look. Let's look at major currency pairs, pull up euro dollar. It's doing the calculations. Oh. Cool. Hey, congratulations, Gisa. So look at that. Analyzing it statistically, both technical and fundamental analysis and flow, because it's also looking at flow. It's looking at fundamentals. It's looking at trend, and it's projecting. So under current analysis of the trend, so let's actually focus on that. Let's just focus on the technicals first. So I'll do a price forecast for euro dollar, and there it is. Okay, base case, best case, worst case. That's projecting the future 7 days in advance. You're welcome. But you can't have this. I have it for every currency pair you can think of. I think 30 currency pairs. I have that for, let's do it again. Let's do something fun. Hey, Wayne, what about the German stock market? German stock market? You trade the German stock market? Yeah. Oh, well, you probably shouldn't. Ha ha! Oh, you have to pay money, Gisa. You have to pay money. I looked at a similar service, and it was $20,000 a year. I'm like, I don't want to pay $20,000 a year. Okay, Euro yen doing the best today. Oil doing the worst today. That's everything else in the middle. Isn't that nice? Yeah, I know. Maybe you like to organize it this way. CAD yen's still a strong buy. Euro dollar's still a strong sell. Just got to set it all up. How's retail positioned? Calculating, calculating. Notice I'm not on a web page. I'm actually on the Google Cloud. It just calculated that. Cool. Look at that. Retail's heavily long Kiwi CAD. Really? Retail's long Kiwi CAD? Ha ha. Ha ha. Ha ha. Ha ha. Ha ha. Ha ha. Good job, retail. Ha ha. Well, they might be right for a couple of days. Maybe it'll come up now and they'll feel good, and then they're going to get crushed again. Trade against retail. Well, remember, right? Let's ask. Well, I don't want to do Kiwi CAD. Anywho. Go to the stock market if you prefer the stock market in the United States. Okay. Another thing you might want to do, I have it under fundamental analysis. Wait for it. So what do you want to do? Euro dollar. Okay. So in this gray, it's what's happening now on euro dollar. So let me highlight that. Oh, make it a little thicker. Okay. That's what's happening now. But if you look at the 20-year average and the 5-year average, typically during this period, the opposite is happening. So clearly something unique is occurring. And that uniqueness is likely that the market anticipates the ECB raising interest rates. Remember, the whole point of doing fundamental analysis is to analyze the economic data, not just the economic data, but the trends in economic data, to anticipate the change in policy. And that's what's happening here. Okay? But it's nice to know. And then look, normally when euro dollar goes up, it tanked. So this is just one of those wacky years, huh? Look how bad that was. Crazy. And you're like, how bad was it? So if you're looking here, let me open this up a little bit. Hang on, it's calculated. Again, this is not a static web page here. This is actually the algo crunching the data. But just look at, just amazing, like if we're analyzing the currencies right now, well, that's the stock market. The currencies here. Pound dollar, for example, is down 6.28% this month. And euro dollar is only down 3.75 this month. But how many people here have told me, let's do this. Let me say it differently. How many people here have heard me tell them to be ready, willing, and able for the market to move in the third week of August. Okay? No, Moses, you can't own the videos. No. How many people have heard me say, be ready, willing, and able, third week? Now, let's quantify that. Is it full of crap? Or is it good advice? Well, this is the second week. This is the third week. Which one seems to have more volume and volatility? Imagine if you didn't know. Ha! Imagine if you didn't know. Oh my God. And which way did it go? Down. This is the stock market now. Right around that time, started to fall, and that's when we started buying USD. Isn't it nice to know? Huh? Now, you're like, Wayne, I don't understand the scatter plot. Well, it's because oil is so far down, it's so negative, that it's adjusting the skew. So why don't we just do major currency pairs only? Dollar yen currently, and this is updated a lot, okay? Okay, USD is the best long, pound dollar is the best short. Okay? Okay? Now, euro dollar is supposed to be a strong sell, and it's not performing today, as it fundamentally you would think. So that's like, uh-oh, well, maybe it'll fall later. Or what'll happen is the trend will change. This will drop from a -2 to a -1, and this will drop from a strong sell to a sell as the technicals and fundamentals change. But look at this. Euro dollar. COT data, -1. Retail sentiment, -1. Seasonality, -1. Technical trend, -2. GDP, +1. Inflation, -1. Unemployment, -1. Interest rate differential, -1. That's a heavy down, technically and fundamentally. But right now, it's not falling, probably because of that ECB. And what we're saying is it should be in the lower quadrant. So it's underperforming as a bear. But USD yen is performing just right. Kiwi CAD, yeah. Euro Aussie dollar, yeah. Okay. You could add some minors to it now and have a nice scatter plot. These are all the things that are working to the upside. These are all the things working to the downside. They're supposed to be bearish. These are supposed to be bullish. So almost everything is working. So, I mean, the other way I could do this is I could do this as a distribution, right? A normal distribution. And everything that should be bearish tends to be bearish, and in fact closer to the tail. And then this is closer to the tail, and then you see everything in the middle sort of neutral. So this would have a fat tail on the normal distribution. So this, what we're measuring is kurtosis. So, right? So you can look at that and say, oh my God, everything that should be going up is going up, and everything that should be going down is going down. And there's actually very little in the middle that's neutral. So the tails are fat, but yet it's still a normal distribution. But I like the scatter shot. So you have to look at it like you're doing calculus. Okay, you have to break it into quadrants. Cool, cool, cool. So I look at that and think I should be making money today. Cool. And like I said, I'm farting around 1,000 pips. All right, cool. Great. Yeah, so it's nice to know. Somebody asked, well, what if you're just scalping? Well, you want to know where everyone's positioned, don't you? Thank you, Henry. So let's go to the Bank of Canada. Canada. Let's go to the Bank of Canada. 3.25. It's craziness, right? Oops. 3.25. It's been a long time since we had that level. That level of interest rates. Okay, so it was 2.5 earlier. Now we're 3.25, and inflation is slightly higher. Remember, these central banks would prefer inflation to be just slightly higher than growth. So either inflation needs to come down to 5%, or interest rates need to go to 6%. Right? The spread between the two needs to narrow. Yeah, it's funny. So somebody asked the Bank of Canada if they printed cash to finance the Federal Reserve. Dumb question. The central bank doesn't print cash. It creates credit. It's a credit institution. It doesn't do anything with cash. It has vaults, but I wonder what percentage of member banks deposit cash at the Federal Reserve Bank. That they're like, you know what, we're going to hire an armored truck to carry our cash to the central bank. And then we're going to manage our reserve requirement ratio with cash. No, homie, you pay money. That would be a good way. Okay. Anywho, so they were asked a dumb question and they gave a dumb answer. Of course, they didn't. Oops. I don't want to go there. Twitter feed. I hate Twitter. All right. But anyways, of course, they didn't print any cash. Cool. So anyways, things have changed in the world for Kenyatta. Cool. Congratulations. We could take a look at how this affected things on the short run. And it's good. Okay. Okay, right now we're trying to figure out a direction. Huh? So this is CAD, the Canadian dollar, versus all the major currencies, adjusting every 5 minutes relative to all the other major currencies. I find it hard. It's hard to find the will, whatever, never mind. Hello, 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 hello. With your trades off, it's less dangerous. Here we are now. All right, cool, huh? Yeah, bum ba dum bum 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 ba dum bum ba dum. So what else is doing good in a risk-off world? Let's go back to today. Okay, pound is just tanking. Very nice. See, stay away from the euro right now. That's fine. What should we pair pound with? Pound Aussie? Nope. Pound CAD? Could be a rabbit, could be. Okay. Pound CAD. So you'd go to the CAD. Pound CAD. So we're back into this. Okay. Cool. Now, how would you know to be looking at that? And that would be where your fundamentals need to come in. What I've been teaching for years and years and years and years and years and years. And you can see for a very long time, when you add up the aggregate fundamental data and include the technical trend, this has been a strong sell for a while, either a sell or a strong sell for a while. 89% of retail traders are long. Okay? See, the issue is with this pair, the majority of institutional investors are shorting the pound, so this is going to fall no matter what happens to the CAD. Okay? And 63% of institutional traders are long CAD. So institutional traders are selling the pound and buying the CAD. Not necessarily trading this pair, but they're short pound and long CAD. Okay? And that's based on current fundamentals. You can see based on the 20-year averages, it's very unusual to be doing this. The 5-year average says up right now. The 20-year average says up when you're analyzing seasonality. But irregardless of that, okay, and by the way, just this particular month is a little drop. So you got a little -1 on the seasonality. And then next month it'll pop up, and that will go from a -1 to 0, or maybe even a +1. And that would drop this. Yeah, it'd still be a strong sell, but the fundamentals wouldn't have changed, just the seasonality just the seasonality there. But technically this is still bearish. And when measuring the flow, which means the actual positions of institutional cash, this is unusual, but it's happening. You know what I mean? And that's a sign of the times. So you go and you're like, oh yeah, 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 yeah. Okay. Now, the way you trade this, technically, because remember, all of this is just fundamental. Okay. So what I was saying last night, oops. Oh man, everything just went wonky. What is going on? Windows just went ape crazy on me. What is going on? Nothing's right. I'm torn. So I don't know. Hang on. I gotta see what you see, because I don't know what you see now. Hang on. That's, I think, about right. Cool. Good guess. So what I was saying last night is, hey, take a look at 152.01. $152.01. Man, I got to now reset my toolbar. What did Windows do? Man, oh man. Because remember, even if you're a bear and it says, hey man, strong sell. But that's just fundamentally. That doesn't mean strong sell now. You'd be in dum-dum if you did that. So one of the things it says, look, there are different models, right? So imagine as one standard deviation above the mean and one standard deviation below the mean, but tracking the mean meaning the average direction. So it said, take a look at around 152.01. Okay. This area here would be an interesting continuation. No, I have to do it differently. That's not going to work. You need the other study. Insert. I think it's linear regression. There we go. Okay. So it's right. So we are analyzing this using a linear regression study. So, having this as a potential area of, if this is fundamentally bearish, okay, aka strong sell, then you need to do technical analysis to sell high. So one way to kind of like how high is high, and one study that was done automatically, because remember, it's just an algorithm, it's dumb. You're smart. You're smart. I can't find where QuantBox went now. CNBC. So weird. There we go. That's not it either. Where did it go? I have to shut all that down. It's gone. QuantBox is gone? No, I got to bring it up here. But that's a different instance. Let me kill that. Where did it go? I guess we were here. Wow. Okay. So all I was doing is like saying, if the trend is going to continue, then using various studies here, you could suppose that 152.01 is where you'd probably wake up and say to yourself, hey man, if this rolls over, maybe I need to get short. Let's do a 15-minute chart. There we go. So you're sitting there going, hey man, how about there? Or how about there? Or how about there? You see? You still have to do technical analysis. But at least you have a better understanding of why it might work. Does that make sense? Okay, hang on. Okay. I'm going to leave it there. I got to go. Got to jump.